How bad do you want it? Is a question I ask myself every single day. When trading, I ask myself, how bad do I want this? How bad do I want the money? How bad do I really want this? I want it that bad to the point where I'm supposed to be studying for my exams. I have a midterm review under my eyes right here, under my microphone. And I'm doing a trading video, a trading recap, when it is currently 10 p.m. and I should probably go to bed, probably get my exam study over with. But no, I wanted that bad. Let's talk about today's trade. As we noticed in previous videos, I did tell you about this fair value gap here on this daily that I hope you have noticed and you have noted that we have rejected multiple times. Now we are trading into it and we've traded out to it. And I said that we would reach this daily order block, which is right here, which I have marked out right here. Marked out perfectly. I also had the consequent encroachment marked out if price wanted to trade up to it, which it did, but it didn't. That tells me a lot. Moving to the 1 hour, if this will work. I had marked out the buy side liquidity on the daily time frame, which is the highest buy side for price to want to target, which it did, but it did pre-market at around 3 to 5 a.m. So currently during London session. Keep in mind, London session did create London lows. As we can probably see here in the kill zone. We cannot because it is on the 30-minute. The kill zones are here, London low, Asian high, Asian lows. Keep that in mind, that's important. I did not mark the London true open because I'm not trading the London session. I only marked the New York true open with the quarterly theory. Now, today we did have news, which I will pull up right here. Oh, I'm on the site. That's the midterm study guide. Thursday today, we had we had this. I don't know what this is. OPEC JMM meeting, which is all day. I've never seen this type of news. OPEC meetings are attended by representatives from 13 OPEC members and 13 oil-rich nations. Oh, wow. Okay, so this is very impactful. That's probably why this is very impactful. 8:30, we had core PCE price index and unemployment claims. These two are big time, okay? So if you look back, what did we notice? London session, we noticed a trend higher. Then I get on the markets and I notice that we have taken out this buy side. So in my mind, I'm waiting for a reaction either off this buy side, but 8 a.m. it actually wanted to go higher and it traded higher. Okay. Tapped into this daily order block right here. Notice the price action, please. 9:30 open, we get a very strong bullish move up. And if you know anything about the 9:30 open, I should not have to repeat myself, but you know damn well it's volatile. It's very, very volatile. What did it do? It traded all the way up, all the way up, all the way up, all the way up. Near, but not close, near the consequent encroachment of this daily order block. What does that tell me? That tells me that price wants to come higher. It wants to take out this consequent encroachment. What is it? It's so close to here that it's actually going to target up here. It wants to sweep this order block. It wants to go higher. You can feel it. Now, like a good boy, I go back on the 5-minute, and you should have marked out your New York True Open, which I did right here, with the 90-day cycle here. As you can see, the quarterly theory is in action. you can see that, where is this? Okay, 6 a.m. right to 7:30. Okay, that's wrong. Why is this? That shouldn't be like that. We just want New York. There we go. Okay. So we notice here that there is some kind of this AMD, this XDMA or whatever was not. I didn't want to trade this, and I was correct in my bias to not trade this because this did not give me any kinds of opportunity to take a trade. There was an opportunity, but the price just did not come to my zone, and it just it didn't react the way I wanted it to react. Let me explain here. New York session opens. I'm looking for accumulation for the AMDX setup. That's my favorite. That's pretty much everybody's favorite, right? Very easy to trade. I'm not noticing any accumulation. There is accumulation down here, but then we kind of get a move up, and then another move up, and a move up, and a move up, and a move up, and we just keep going up. There was no sign of, there was no sign of manipulation because there was no sign of highs being taken out. I mean, these are highs, yes, being taken out from London, but there's no reaction off of it, and there's no down move down to give me a bearish bias. Okay, and I want you to remember, manipulation needs to happen around a high time frame PD array. If the manipulation were to happen, and this would be accumulation here, because we just swept again this daily buy side, which was right here. So with price action, if you know it well, you would also know that price, after it gets choppy and it moves up like this, right, it needs to react off a high time frame PD array, and that's usually the daily. It wouldn't react again off this liquidity because it just traded through it and it just chopped through it, right? So why would it manipulate higher to come back down? Which is a possibility, but there's no higher time frame above or below to target. Now, it trades up, all the way up, all the way up. Like I said, we're not going to talk about this again. Now, this is the real manipulation up here, right? Going up, manipulating, coming down, right? The thing is, if you look at the quarterly theory, the manipulation should have happened in this quarter, right? Unless you're in a, what is it called? XDMA. X being the continuation of the trend, D being the distribution, M being the manipulation, and A is accumulation. Now, my rule is to not trade until 10. So this is when 10 happened. And, well, thirdly, I wasn't on the chart at 10, and I think that could have saved me, I think. So I came back and I just saw this plummet, and I mean plummet. Pretty sure I was in leaving advisory going to first period. I don't fucking know. I don't remember where I was at 10. Saw this plummet. Okay. I had this marked out, so I noticed a strong sell. Now, my first, and you should have marked this out too, is on the 1 hour when I did my back testing yesterday, or my analysis yesterday. I noticed this strong uptrend, right? And so this, when I drew my OTE, I'm pretty sure, if I'm not wrong, where did I draw this at? I drew this from this current swing low to, and I made a bold mistake, or not mistake, I made a bold choice of predicting price action, saying that price action would actually make a swing low here and not trade higher. So I imagine this black candle wasn't here on the 1 hour and I just had this candle. I put my OTE there because I predicted that there would be a swing high, which means that this makes a valid OTE. Guess what I found? Even if you go on the OTV2, prefer this one. We look at the golden zone, the golden area. What do we find? Fair value gap is right here. See this hourly fair value gap that lines up with these lows, consequent encroachment. So that was our target here. Okay. That's why I had it marked out 1 hour OTE fair value gap. Okay. Now, price did come down a little lower. That's understandable. Did I want to trade this? No. My target was the bottom of this, if not consequent encroachment. That's it. Price got to there. I stopped. I knew that it could go down. It's not going to stop right there, right? Maybe it wants more liquidity, but I'm not going to be in the trade when it does that. I got my money. I'm out the market. Just to let you know that that is the bias and that it was targeting. Now, I want you to also notice this nice little price action with the true open, right? We get this big down move. Then where do we come back down? And I saw this live too, so you know I can experience this real life. We come back to this daily liquidity that we've swept and we've reacted off of. So now we come back to it. And we have some kind of reaction here because it starts accumulating. And then it trades up. But where does it trade up? This is where it gets algorithmic, doesn't it? This is where it gets algorithmic. What do we say? Everything above New York True Open, we can sell. Anything under, we can buy. What's this? It's above. So they start selling. Manipulation. They start selling. Saw this live too. Pretty sure this was, 11, right before lunch. Started going down. But where? Oh. Do you remember talking about the London lows, Asian highs, Asian lows? Because I do. London lows. That's the first target. Completely swept that. And then we did something very interesting, which is like, if you remember, the top, but it's just reversed. We got so close to Asian lows. So close. And if price is really being manipulated, then it would have taken this out. Look, it's not even like, it's 0.3 cents away. 0.3 cents away. That is like, that's not many orders to fill, man. That's very close. That means we could easily come back down, right? But what happens? What happens? We're not reacting off any PD array, as far as I'm aware. There's nothing down here on the 5-minute. Could have been a fair value gap that I'm not aware of. It's totally possible, right? Here, but there's nothing down here that I'm not seeing this price react off of. Asian lows. And then it goes up. And this is the part where I am watching price very closely. And I mean very closely to the dot. Because I know exactly what price wants to do now. I know exactly what it wants to do. Because this looks like a distribution, reaccumulation, redistribution kind of setup. I'll teach you. Distribution, usually there's a big fair value gap that gets created. Price taps into that, distributes again, then reaccumulates, and then it creates another fair value gap somewhere around here. Price comes back and redistributes. So that was I knew that was going to happen. I don't want to be cocky, but I knew that was going to happen. It was pretty obvious. So what do I look for? Well, my strategy teaches that the one I use, right, is that you need some kind of reaction off some kind of liquidity, which we got here. So move up. And then the first thing I did without drawing any fair value gaps was I drew my OT right away. Swing high right here. Swing low right here. Look where that brings us. Okay. This right here. Obviously, the first fair value gap that caught my eye was this one. Okay. So I had that marked out with the OT. Lines up pretty close to the consequent encroachment of this fair value gap, and it lines up pretty close with the OT level. And it's also right in the middle of this daily liquidity that we previously swept, but that we're accumulating here. So that's 3 PD arrays for me. Okay. Keeping that in mind, we'll just delete this because I did not trade with this. What I waited for And this was a little risky because I entered early. I will not lie. I entered like on these candles up here, and I'll be honest. I'm now being very honest. I entered very, very early. Very early. Right around here on these candles, on these choppy candles, because on the, I think it was the 15-minute. I mean, this happened live, so I can like replay the candle itself, but the 15-minute looked like a doji candle, and so I was like, okay, so it's it's turning around, and I want to get in as soon as possible, because I'm pretty sure I had, okay, yeah, we were getting out of lunch right here, or somewhere around there. No, we just got to lunch. Okay, yeah, so I didn't want to miss out because I didn't think I had internet, so I entered. Okay, very risky, I know. And at first, I'm pretty sure, I don't know how I did my standard deviation, but I know I had some kind of standard deviation somewhere. I'm pretty sure it was like this high to this or some shit. Maybe, I don't know. I don't think it was that one. Anyways, entered there, trusted my guts. I trusted price action because I've seen this happen many times, and I knew, see this little wick right here? When that happened, I knew that the sellers were going to start selling hard, right? Because they just theoretically swept this fair value gap, and they swept the OTE. I was smart. I didn't get caught off guard. See this high right here? That's where my stop loss was. Not here. Here. Right here. Didn't get stopped out. I was in drawdown. I'll admit that. I was in drawdown, but not for long. This was in the middle of English class. I do remember this. I was kind of anxious at the time, but I was happy to see that price didn't come up, get to these highs. It kind of just rejected the OT again. Would have liked to see candles like close under this OT, but you know what? It's under the consequent encroachment, so it's fine to me. So what happened? We trade down and we trade up, okay? But what do we get? I'm looking for a market structure shift. A big market structure shift. And we get this, I hope I got this right, was right here. No, we didn't. Look at that. Even on the 5-minute, notice this? It doesn't close there. So that's not your market structure shift. To me, that's a failed market structure shift. Right? So where's the real market structure shift? Where is it really happening? Well, I believe it's right here. Boom, boom. There. It creates a low, but it doesn't close there. It closes above here, which is above this low, right? Everything closes above this low, which if we broke this low, this would make it a valid market structure shift, but it doesn't. We created a lower low, but we close above this one. So then the next valid structure shift or market structure shift would be this low. So we come up, we start selling. I'm in English class, I'm seeing this market structure shift, and I'm like, boom, bam, I got my trade. I'm locked in. I close my laptop because I know what happened. We're in the redistribution, the third leg down, right? There's no more after that. There might be a little more, but this is like when market closed. So this is the very last leg that you could take a trade. Maybe take a trade here, but it's very risky because it's 3 p.m. So it's like right before market close. I wouldn't do it if I were you. That's very like risky. Very last leg. It needs one more push down to get to this Asian low. And then I draw my standard deviation and I realize, wait, I can actually set my target to the consequent encroachment and the bottom of the fair value gap. Because look at the standard deviation. Look what we get on the 5-minute. 3-minute, my bad. We get the swing low, the swing high, and that swing high creates and takes out that swing low with the market structure shift. So what do I do? Right? Take your standard deviation, swing high to swing low. That's your standard deviation. So that's where the trade is going. So where is it going? one stays right here. Guess what we get? I want you to notice this. How it's all algorithmic. That zone reaction. I'm just saying. Just saying. 2 to 2.5. Okay. That's valid. Not a huge reaction, but that's where most traders would get out because that's where most liquidity rests, and this is where we target most of the risk to reward because it's around 8 risk to reward, so it's a pretty good amount. And then here, consequent encroachment of this zone. I wonder what it is. Oh, would you look at that? Would you look at that? If that doesn't tell you that price is a little algorithmic, I don't know what does. I know. This seems confusing. It is. It's very confusing. But it makes sense. To me, it does. And I don't really know how to explain it without making you confused. All I know is that it works. And I'm going to keep using it because it works. Anyways, standard deviation. And then you let it run. You let it sit, right? Yes, it goes up. It gets choppy. But if you're watching this close like a real trader, you would notice, and any trader would be emotional here. It'd be like, oh my God, like it's going up, it's going down, it's going up, it's getting choppy. Is it just going to break through? Is it? I mean, market structure shift just happened. So it's supposed to maybe re-enter off this fair value gap. So I'm supposed to see it move from here, but it just broke here and it just consolidated. And what's going on? Just wait. The thing that would have caught me off guard here is if this high right here traded above and closed. If that closed above, I would have been like, yeah, I'm good. I'm going to go ahead and get out of this trade. Even on the 5 minute, look at this. Look at price action. What is price doing? It's coming up one more time to grab liquidity to make its final drawdown. It just created the market structure shift. We also have all day long news happening. So price is volatile. It's expected. That was expected. Wants to grab a little bit more. Notice how we don't close. Pretty sure even on the 15 we don't close. The 30 minute we don't close. 30 minute nice little doji. Look at the different time frames. We don't close on any of those time frames. And if we did, I would have gone out. Even if it didn't hit my last stop loss. Price action just doesn't behave that way. It just doesn't. Do you see this candle? Does it close above here? Does this candle close above here? Because if it did, then it wouldn't be bearish. Watch price action. And then the rest is history. Right? You just wait, it starts dumping, and then we break this low. Okay? So the second like market structure shift, pretty good, pretty nice. Happy about that one. Once it closes there, I know that we're going down even more, and I'm targeting my first take profit would be like in this range right here. Right? If we draw this range again, would be the take profit. Excuse me, to throw out my gum. That would be the first take profit. I was also watching this. Oh shoot, when was this? I'm pretty sure. Yeah, last period. Last period. History. Remember this very clearly. I had the. Oh shoot, where's the OT? I did have an OT, but on what? Oh, I had it on this. On the high and the low here. I'm not entirely sure why, but yeah, I had that up. I don't know. I just want to just take a look at this and tell me that it's not algorithmic and tell me that the market isn't controlled. I'll sit. Go ahead. Prove me that it's not. It works. This works. That's why I'm using it. Comes back. Doesn't trade above. It doesn't close above. My bad. Look at these fucking under, up, under, golden zone, trades into it, liquidity, fair value gap, consequent encroachment. Just if you guys don't know this, little fair value gap here, taps, consequent encroachment, algorithmic, comes back, taps again, institutional order flow, drops down, breaks low, targets what? Targets what? Consequent encroachment, my bad, targets Asian lows, consequent encroachment, full fair gap, you're out. That's your final piece. If you really wanted to play smart, you could have done this move, which I showed you. Consequent encroachment of this. Very nice tap. Very nice entry and stop. That is how I trade. This is beautiful. The fact that I can understand this and that you can't makes me happy. Because I know I'm doing something right. That's all I'm saying. The fact that you're not here right now during this video makes me happy. A lot of people already left. And if you're still watching this video, props to you, man. You're going somewhere. Now, not by watching me. No, of course not. But what I'm talking about is what I've learned. So if I can learn it, you can too. You can also learn it. It's never too late to start. I'll tell you that one. It's never too late to start, but you better start today, not tomorrow. So yeah, to recap, risk to reward, 8 to 1. I'm not even sure how to read that, but stop loss was tight. It always is, but I feel like I don't need a stop loss. And this might sound crazy. Yes, I need a stop loss, but it's mental. It's all in price action. Like I said, if I saw this candle up here, let me delete this fucking shit. If I saw this candle close and trade above, mentally I'm already out of the trade. Mentally, I'm like, this isn't working out. I did something wrong in my analysis. I need to close the trade and then do my analysis. I don't need to do my analysis during the trade. No. I need to do it when I'm out of the position and when I'm out the market. If I saw that close, I would have been, let me get out. I would have been in drawdown for maybe a second, lost $5. I'm out. Because the risk I don't want to take is for this to trade all the way up, hit stop loss, and I'd be like, damn. I knew that was going to happen. I saw the price do this, but I didn't get out. Why? Because you didn't trust your guts and you didn't watch enough price action. I'll give you an example. And if you're still here, again, props to you, but I'll give you an example. And this actually relates to what I'm doing right now. And this is a real life example. I'm watching this show called NCIS. And I've been watching it for a long time now. Every 2 months, every 3 months, every 4 months, I come back and watch maybe a season or two, right here and there. I'm at like the 7th season. I'm pretty sure there's like 25 with like hundreds of different actors. I'm like OG, like this is like the very OG seasons, right? And from time to time, I can predict what the characters do and what they say. Because I've seen it so many times and I've seen it happen over and over and over and over again. And I've studied it. My brain has remembered that this character says this when this character says that. This goes with the market too. If price does this, then price will react like this. And if price doesn't react like this, something's wrong. Something's off. Get out the market. I don't want to say it's that simple, but it kind of is. It's like you're watching a TV show. You sometimes, even in the movies too, this happens, and I know you do it, you sometimes predict what the actor says, or what the character says. Because you know them. Somehow, even on a personal level, you know what they're going to say because you know what they said last time. So there's a high probability chance that it happens again. And if it doesn't, guess what? You're wrong. And that's it. So in the market, when you're wrong, that's it. You're out of the trade. That's it. That's it. You did a bad trade. You didn't predict right. That's it. That's all it is. Thank you for watching to the end. I really appreciate it. Again, if you're here right now listening to me, you've got potential. You have potential. If you're willing to sit through, I don't know if it's a school night for you, but if you're willing to sit through this whole video listening to me, you've got potential. I'll see you in the next one.